In this video, traders, we're going to look at the pros and cons of trading just one market. Stay tuned. Hey guys, warm welcome to you. So I want to tell you a story, okay? When I started trading, I went through a period of time where I was trading UK shares, London Stock Exchange traded shares via what was called sets. It's still called sets now. So using a level 2 kind of price action tape reading edge after losing for a long period of time. Then I kind of got a bit of an edge, and I think I've told the story before, where I started trading a specific sector, specializing in that sector, worked really well for a while. Then I transitioned over into futures markets, and I was trading YM, DAX, CL, which is crude oil, and on and on and on. So anyway, that little portion, I was trading YM specifically very exclusively for a long time. And the great thing about that was that every nuance, every movement, same with the DAX, same with crude oil, and I kind of transitioned between these three for probably almost a decade actually, back and forth, and I still trade those very actively now. But the point is that I had a really good feel for how they moved. I had a good feel for when the conditions were right, it just became, the flow was nice. My trades were working well, my losses were cut. It was like a textbook type stuff. Was I winning every trade? No, of course I wasn't, but I was cutting my losers short. I was letting the runners win. I had a feel for when I should be going long, when I should be going short. And actually, just thinking back to the last couple of weeks, looking at the Dow, looking at the way stuff's been trading, when it's in flow and you know the market, there's nothing better. Things are working for you, trades are working well. When you're not reading it, it's not so much damage, you're not digging big holes, you're not getting frustrated, you're not amplifying those emotions. And so trading, I'd say one here, trading 1, 2, possibly 3 markets very intimately works fantastically. And when the conditions are right, it's a great way of trading because you're getting opportunities regularly throughout the day. If we look at the conditions now, and obviously different depending on watching this video, conditions now, very active. We're getting days that are quiet, but generally very active because there's a lot of kind of global news flow hitting. And so you look at the US indices, very active, crude oil started to pick up. So there's opportunity there. And as day traders, if there's opportunity, that's all we need. So you get multiple opportunities a day to make your trade. Maybe 10, maybe 20 opportunities there in the day. So it means that even if you miss a good chunk of them, there's still a couple of good trades there. And really, as day traders, it depends how active you are as well, but I would only look for maybe 1, 2, 3 opportunities at the most. Decent opportunities I can take a big chunk of, a big meat of the move, and move on. So that's why becoming a specialist is a good thing. Now, going back to the story. YM, beautiful trading vehicle, working very nicely, nice steady account equity curve, all looking good. Then things start to go quiet. So you've again got a choice. When things go quiet, what do? Do you go, right, well, I'm either going to stick this out and try to adapt my strategy. And now there's only so much you can do with your strategy, right? The spread to the spread, the commissions to the commissions. If you're only moving a certain period of, or number of ticks, number of pips, number of points in the day, then it becomes challenging, right? As a day trader, we need that volatility, not crazy volatility where it's just wild, but we want some decent volatility, a sweet spot. So do you adapt and adjust your strategy to suit that? Or do you wait until conditions become more favorable? Or do you then move on to another market? And so the 3 choices you've got. Now, adapting strategy is tricky because, especially if the volatility is just so small, it becomes you're just trading a completely different way. You're trying to work orders on the bid, the spread becomes more meaningful. You kind of sit longer with trades. You get maybe 1 or 2 opportunities a day to get the meat of the move as opposed to 20 or so. It's a challenging environment. So the other thing you do is you say, do you ride it out? And that's not a bad thing to do, but how long do you wait? Is it going to be a couple of months period over the summer? That's fine. You can ride that out. It's to be expected. Maybe even a 6-month period. You can probably ride that out and eke out some trades here and there just to keep things ticking over. But what about if it's going to be 1, 2, 3 years of stagnation? What do you do then? And so the third option is you start looking at other markets. You start saying, okay, well, how can I use a strategy that was working well for me in other markets. And for me, I decided to then move on, and that was when I moved on to things like crude oil, and I moved on to some of the more volatile US stocks, tech stocks at the time, and using the skill that had kind of worked for me then, a price action, tape reading kind of approach into different markets. So going back to the initial question of the pros and cons of trading just one market, I think it makes perfect sense to be intimate, for want of a better word, with a couple of markets. You've always got your favorite markets. I know you guys, I go on about the DAX and I go on a little bit about the Dow and crude oil because they're my three babies, if you like. However, I've also developed similar strategies for specific stocks. I talk about some stock trading strategies because when there's volatility in an individual stock every now and then I'll move and use a similar type of strategy, maybe a little bit more filtered on the stock trades. And so I've got a little bit of a kind of complementary group, if you like. There's the cores that I go to, but then there's also scanning the stocks, looking through the stocks, looking for those specific setups that I know I can scan the whole universe for. Maybe I get one of those every now and then that work or don't work depending on how the trade plays out. There's trading, right? So the sweet spot, I believe, is that you have a few markets that are your go-to markets and that you understand and you get to feel, but you also become a specialist in a few strategies and setups that you can use in other markets. I know that several years ago, it must have been now, there was an explosion in coffee for whatever reason. It was something about some beetle or bug was hammering the coffee fruit, the coffee bean, whatever they call it. They call it the fruit, don't they? The red fruit that grows on the coffee bush. That was getting decimated by this kind of bug or whatever. Listen, you could tell I'm not an ags specialist. The point was, doesn't really matter. Read some article, recognize this is why coffee is absolutely ripping up, recognize there's a lot of hedge funds that I know are taking a short position on it. That's as far as my fundamental research goes. Right, done. Now I know what's fueling it, what the catalyst is, what's going on. The patterns are still the same. Then you can trade that instrument, in this case coffee, as you would do, say, if it were you're intimate with USD JPY and it started to explode and you were trading a momentum ignition type trade, or you're trading Tesla, or you're trading Apple. So you've got your little babies, now whether they are currencies, whether they are indices as they are for me, or whether they are a couple of stocks, whatever. And you also have a selection of strategies that you're specialists in that you can bolt into different markets when they kick off, so you can be constantly scanning if you need to. That then hedges you a little bit for when the fruit starts to not fall off the tree so easily on some of your little babies. And then it allows you to move over and pivot and be able to at least hit the ground running and become a little bit more aggressive with that strategy. You might not trade that as aggressively as you do with your kind of day-to-day go-tos, but it allows you to pivot and twist in between the two without, I think, spreading yourself too thin. Now, if you said to me, right, I just want to become a specialist, I'd be like, fine, but be prepared for when things go quiet or things aren't as fruitful. And if you're prepared for that, then by all means, milk it for all it's worth while it's working for you. I'm an advocate for that. If you guys are a subscriber, well, I appreciate your subscription and support if you are. But if you are, you know, you've probably heard a video where I talked about, listen, if it's working, hammer that throttle down and push it because it will stop at some point. That edge will diminish. That setup that you think will last for a long time won't work as well as it has done at some point. So you, by all means, if something's working for you in a specific market, some obscure market or some big market, then press it, extract as much as you can out of it until it stops working, then take a step back and assess where you need to go. Don't overcomplicate things. But if you're thinking about, okay, do I become a specialist in a strategy, specialist in a market? If you said to me, I just want to become a specialist in a strategy, I would say that's fine as well. But perhaps also get to know one or two favorites so that you get to know the nuances, you get to have that feeling, that sort of subconscious, well, I think we might be turning here. How am I judging that? Not quite sure, but I feel like price action's kind of waning a little bit here, momentum's stalling, I don't feel like we've got another leg in it, whatever that may be, and start to kind of build on that muscle, if you like, as well as having the setup that has you the logical filtering process, the logical scanning process, etc. Whatever it is, it doesn't matter. The point is you've got that, you can go to that, you can also go to your regulars as well. So the point, I guess I'll go back to the first initial title, is pros and cons of trading just one market. Those are the pros, those are the cons. If you're going to do anything, I would definitely suggest becoming a little bit more specialist in one, and also having a kind of go-to library of strategies that you can use not only in that one, but also that will work in others if that starts to not being as fruitful or as useful or as plentiful trades as you're used to. All right, guys, take care. Let me know in the comments below what you are. Are you specialist in one market? Is one trade, one market you strictly trade and that's it? Or is it one setup you trade and you trade that in any markets? Let me know. I'd be interested to see what you guys are up to out there. Take care, whatever you're doing. Bye-bye.